Friday, just after 3 p.m. Eastern Time on Friday the 12th. Bit of a surprise volatility move today. We are quite a bit lower than the expected move today. Opened up around 86, currently trading at 27. So about 60 points off of the open this morning to the downside. So let's have a look. Pretty red in the S&P. Broader market down 54%. I think advanced decline. For the day, I think we're down just under 1% ish. Had a surprising calculation today in daily profit play. We had like almost a 3-hour session. Definitely not the norm, but kind of real trading, improvised, and happened right in front of your very eyes in my daily profit line room. Hopefully, we have a couple of trade opportunities that will line up for winners. Here is what my day looks like. So there's a lot going on. I mean, one could say this is over trading, but basically these are all like pretty low risk, high reward opportunities. I'm just trying to see if I can get something that pays me late into the day. I would also like to see price, if possible, finish above 68.40 for a winner in daily profit play. So the sweet spots for me would either be a big winner between 68.10, 6800, and 67.90. A big winner above 68.60 or right at 68.60, 65 zone. And we kind of have some traps. I got like a $900 trap. This didn't quite take it with the way I put this in option strat. This part right here in the middle. See if I can freehand this thing. Or can I just draw this? So in the middle, this actually is a slightly larger profit trap for about $915 right there in the middle. So we'll see. Basically around 25, so 68.25, 68.60. So I go 68.25, 68.60, 6800. I mean, given the fact we have an hour to go, I mean, unless we see what is price trading at right now. Let's go back to this. Right now, price is trading at 28. So we either just kind of chop around here for this 10, 20 point range, and maybe I can get close to that like 68.20 zone, which would be this bad boy here. So the 68.25 is a profit trap, about $900. That would make it worth my while. However, I do have a $400 risk below 68.35 on daily profit play, which would be a loss. So we'll see. I mean, at the end of the day, I'll see where the cash settles, see where the trade results end up. It'd be lovely to have a profit trap to end the day positive. It'd be lovely to mitigate some of the risk. It'd be lovely to win daily profit play and get a profit trap so I can end the day nicely positive. But the market was a little crazy. We had a plus minus. This is where we opened. Okay, 68.86 where we opened. We had a plus minus 31.19 in the day. We can see that didn't hold. So we went from 86 all the way down to 02. So we had an 84-point drop in the day. That is well over double than what was expected. So 84-point move over a 31.19. We had a 270% move. I mean, almost a 3x move from what was expected today. Now, the day isn't done, of course. We might still get back above 50 or 60. Plus or minus, I mean, if we did the math here, I think I said this morning. So 6886 minus 31.19. If somehow we can close above 68.54 by the end of the day, 68.54 end of day close actually gets us back into those market maker levels, which would be pretty amazing considering the volatility kind of on a random Friday and a big disappointment for the week to go positive and be all excited after the Fed on Wednesday, even into the push yesterday. I mean, we've had a lot of interesting volatility this week, right? So here was our Fed day, right in here. So Fed day, absolutely nothing. And then price rallies on the rate decision, rallies on Powell's comments. We gap lower on Thursday, chop around, and then still finish the day higher, actually taking out those FOMC highs from Wednesday. Today we open, no nudge to the upside whatsoever, just straight down. Now, does that do any major damage to the market? Not really. In fact, we are now into a 2-week range where we're just sideways. This is where we opened up last week. Okay, this is where we are at the end of this week. Very minimal price action. All-time highs. Now, I know that yesterday the market said S&P at all-time highs. Well, it did close at an all-time high, but to me, This is the all-time high that I'm paying the most attention to. This is where price was 69.20. So the previous close was all the way down below 60, like 6,800 and something. So yesterday's close at like 69.01 was celebrated as an all-time high, which it was. But I'm looking at, can we regain the 69.20 handle? Can we regain, maybe making a run towards 7,000 at the end of the year? So some support that I'm watching. Here is our NVIDIA sell-off candle. There could be some intermediate support right in here. So this resistance level could offer some support. That's around 67.70. This could also be a bit of a reversal pattern. If you look at price today, straight down, just kind of draw this out. So I could see a couple things happening. We either go try to draw this. So we go flush down today, bottom, and then we take out this high and we just march right back up to highs again. Or this takes a little bit longer. We have a flush down, works its way back down to the lows, maybe slightly lower. Then we look for a reversal pattern that gets us into the end of the year. So as long as price stays above 67.70, I would still say the market has a chance to finish bullish for the end of the year and possibly get back to fresh all-time highs, maybe even sniffing that 7,000 handle. Okay. All right. Bashy, what's up, dude? Lori, what's happening? How's everybody today? All right, here is a look at the heat map. I took a trade today on AVGO. That was for Project Options Edge. Let's see what we have for some current live gamma going into the close. Right now, biggest level, 25. So between 20, 25, and 30. Stickiest levels. 20, 25, and 30 stickiest levels. I'm watching. So either we, stick around here between 20 and 30, or we make a little rally up to 50. I mean, honestly, one of those two levels would actually be pretty good. If we're sticking around, 50 would be great because that way we can still win daily profit play. We can still knock out a winner there. Even if I close that thing for break even into the end of the day, we have 51 minutes left. If I can get a daily profit play for a loss of less than $50, to me, I consider that like a pretty good day. I don't want to lose, but we've been sitting in risk all day from daily profit play, max risk at $400. And if we're back above 40, there's a chance we can reduce that risk. So let's have a look at that right here. Right now I'm down about $200. So I'm risking 400. I'm cutting the risk down to 200 right now. The question is, do I take it off the table at 200 and take the loss? Or do I give the market a chance to see, could we get back above 40? Could we finish inside the 68.54 market maker handle that I talked about this morning? It's possible, right? If we come back down and hang out at 30 or 25 or 20, I'm going to take a $400 loss on daily profit play, but I have some, $900 to $1,000+ profit traps running, and we'll see if those end up grabbing something. So 68.25, 68.30 is a decent profit trap. 68.00 is a decent profit trap. 68.50 and 60 is a great profit trap. We'll see. We'll see if it lines up. So as we're getting nearer to 40, if we get above 40, 45, or 50, we have a gap level around 60. This is a positive negative gamma level. I've got some pins around 50. I've got some pins around 65 and 70. I've got pins around 25. So I will continue to reference all these numbers. I do have a lot of trades going into the close. So this one is down. All these are pretty small risks, by the way. So these are all risking like right around $100 or less. This one's up $50. This one's still down 200 for daily profit play. This one's down 5. This one's down 60. This one's down 150. This one is down 200. So, net, I'm down in the day. But I'm trying to figure out if I can get a profit trap here in the next 50 minutes and maybe hit a big fat home run. And maybe we'll see where it settles. All right. MP, what's up, dude? Let's see how we go for the remainder of the day. Okay, so starting to fill up here in real time. Just noting the 0 day. So positive negative gamma was around 68.60, 68.70. I'm starting to get some fill levels here on my Tanuki trade. This is their live web app. So 68.40 is starting to light up. 68.50 is starting to light up. That could be a good sign into the close. That would get us back into these intermediate highs, maybe right back here towards like 47 to 50 into the close. Okay. So we'll see. I mean, look, I think if either we stay here around 25, which that level is totally good for me. I've got a really nice profit trap there, or we push up into like 45 or 50, and I've got a profit trap as well as a daily profit win. So if that's the net result, overall, I'd be happy. I also have a big fat profit trap down at 6,800 if this thing just gets crushed down to the close and tries to test previous lows for the day. So 6,800 won't hurt. 6,825 won't hurt. 6,850 won't hurt. So I'm okay where it is right now. I'd like to get closer to 25. I'd like to get closer to a 50. That would kind of be the ideal positioning, given the current look at the market maker move. 40 to 25 is kind of the expected move for the final close, like 8.5 points. But I mean, that's hard to trust. Obviously, the market can, in 5 or 10 minutes, this market can rip, 10, 15, 20 points if it wants to. So whether that's good or bad, I'll just be watching to see how this day closes up. Okay, so I'll park that on my other screen. Let's talk top down. Follow along the single options, put ratios, iron condors. Got it. I mean, flies are 0 day, 1 day for me. If I do a broken wing, I'm calling the top or bottom. Sometimes, a broken wing butterfly can also be used as a profit trap. So here's an example. Let's look here. Let's look at a stock like Nvidia, and let's talk maybe like a 2 week trade, 2 week trade, or 3 week trade out. Here is an example on Nvidia, and let's say. All right, here's the first question. Do you think that Nvidia is going to go higher or lower from here? Just an example, higher or lower. So either from current price, higher, lower, or what level would you like to see maybe some, what level would you like to see like a profit trap? And then what's your line in the sand? So I see NVIDIA a couple different ways. If we go high, low, lower, high, lower, low, then what I would look at is, and this is a tough trade, because if we are going to get a correction in NVIDIA, are we actually going to drop to 150? I mean, that's a pretty healthy correction. We'd be down 30%. If NVIDIA is down 30%, I'm sorry, the S&P is not going to go higher. Okay, so I almost think that the better trade is if we were to say, you know what, this support mattered over here, and we can maybe find the same levels around this like 170 to 165 zone. Is that fair? So what I'd look for is we could put on a profit trap type trade for the end of the year, have it be very low risk, and maybe look at something along these lines. If price goes higher, we can make money. If price stays kind of right in here between 170 and 160, we can get a profit trap. And then we have some risk if price were to drop back below like 155 or 150. Okay. So that's kind of how I draw this trade up. And now I want to see if I can actually create the trade. Okay. So I think as long as we can stay above, let's try to get a break even to like 165. Let me build this out really quickly. So if I go, I'm going to open up a new option strat here, since it's got the other one just holding my tons of positions today. So I'm going to go build. Let's go put fly. I mean, or call fly. It doesn't really matter. But a put fly would be best if I think price can fall, but still give me a take profit. So let's go NVIDIA. Let's see what the expiration is. I can go December 26th or January 2nd. Okay. Give us into the new year. Let's see if I can get this thing. If I buy the 170, sell the 165, and then I skip a strike. Okay. So right now, I mean, these are $5 wide strikes for that January 2nd expiration. Okay. I'd have to go a little bit wider here. This one's not terrible. I do have some excess risk on the downside, which I don't love. Let me see if I can tighten these strikes up a little bit. There we go. This is a little bit better. So I can go 170, 167. So this one's not too bad. So here's what I'm saying. Price right now is around 176. Let's go back to this. Okay. So price right now is trading at 176. the trade that I just built out, if we stay at 176 or higher, or we drop down to 170, I can still make about 50 bucks on this trade, which from my max risk of 450, 50 bucks out of 450, I'm making about 11%. That's not great. I wouldn't, get super stoked about that. But if I make 50 bucks, I make 50 bucks. Now, there's a profit trap back here around the 167 zone, even down to like 165. Now, let me see if I can get this strike moved a little bit. That's what I was afraid of. We're going to take on a lot more risk to get a bigger credit. So I'm going to go 167, 165. Max. Look, this one's not bad. I have a 250 profit trap. So I could make like $300 if so. Actually, this isn't a bad trade. I don't love the max loss at 702. If I tighten this up just a smidge, this is a little bit better. I still have a profit trap of $300, but I'm only pulling about 33.50 on the trade. So what's 33.50 out of the 466? That's less return. So, my point is I'm using this as an example for if I want to design a trade where I think I can still get paid if price goes up. Okay. So I can get paid if price goes up. I can have a profit trap if price falls down into this profit trap zone where there's some really nice support here. And if it falls below that, then I take on my risk, but it's defined risk. So I'd have to be dead wrong. Price would have to break back below a 200-day moving average for us to really take on any heat. This is below the 164 handle. So this trade, as I built it out for NVIDIA, my break-even price is 162. So if we come down to test, where are all my charts here? If we come down to test this strike around 165, that is my profit trap, right? So from now until the end of the year, the 26th, that final Friday in December, which is the day after Christmas, is NVIDIA higher for a 33-cent winner? Is NVIDIA like slowly leaking down where we have a profit trap? So, I guess the trade-off is I don't love the trade for $33 profit, but it's still about a 7% return on my max risk, okay? But my profit trap is up to like $300. About $280 is my perfect little profit trap. Even if this thing was to offer like $60, $70, $80 or $100, basically what I need NVIDIA to do is just stay above 165, right? So my question to you going back to this trade is, do you think that NVIDIA will stay above this level by December 26th? Yes or no? Carly, yes, I'm still in it. Still in it. Okay, so if you think that NVIDIA will be higher than this, then that's a decent trade. Define risk. You have a bit of a profit trap here. If we go higher, we can keep that $30 to $35. If we go lower, we bring in a profit trap opportunity to make up to like $270, $280. And then the risk would be we'd have to be below 162. Okay. We'd have to be below the 162 level in order to take on any risk. Okay. And, again, this is 163.81. This 200-day moving average, which is a pretty key buy level. Like that's major support. So to me, it's like we shouldn't really see too much damage done to that. So do I like the trade enough to take it? Well, if it was offering me like maybe $60, $70 credit up front versus 30 to 35, I would like the trade. But I don't get super excited about like $20, $30 winners when the better trade to me is like trying to land this thing in a profit trap. So there's better ways to construct it, perhaps. There's better ways to play around with the risk reward. And that's where we can kind of, get a fine tooth comb and do this. So I can go 165, go a little bit wider here. Now I'm pulling in, because I'm going further out of the money, I'm pulling in a little bit less credit up front. I still have a profit trap if I want to get more credit, but I'm risking now, $950 to make 50. Probability profit still is pretty high. Let me see what this prices out to be probability wise. If I went 165, 162.50. So December 26th, 165. So if I buy the 165, sell the 162. So that'd be a 250 wide trap and then 150 put. So that's a buy. Okay. So there's about a 90% chance of profit on that trade. I could pull in 40 to 45 cents up front. If price just stays where it is, goes up, I'm making easy $40 to $45. If price goes down, I have potentially a $250 profit trap on top of the credit. So maybe $290 max profit. That would be right around that 200-day moving average, give or take. So anyway, this is why I keep saying over and over again in a lot of my daily sessions that you're with me, if you can think of a trade and think of a direction and think of a plan, you can trade it with options, right? And there's ways to make it very binary where if price is above this level, I make money. If price is below this level and I want it to be, I can make money. Or what I just did there was if price goes up, I make money. If price goes nowhere, I make money. Price goes down a little bit, what's that percentage decline? If price on a video were to fall even 6.5%, I still make money, right? After being down from the top, I think we're down double digits from the top, right? We're down 17%. I mean, we'd have to fall over 20%. I'm not saying that we can't. I'm just thinking that if this is going to, have a, little tech love in the end of the year, like Nvidia should hopefully have a little pop to the upside. So if I had the, the upfront credit a little bit higher, I don't mind the trade. Or if I build it out this way, it's like I wouldn't mind taking a slightly larger profit trap like that. This one's okay. So I increase my probably profit a little bit more. I have a 50 cent. This shows the debit up front, which I don't love. So I'm probably not going to take this trade for a debit. So I'd have to go even wider to get the credit. And I'm taking on more risk. So it's, for only a couple weeks out, it's only 14 days. It's tough to get the exact credit up front that I want. But anyway, this is why, I'm in the session with Nate and Kane on Wednesdays. We call this Build a Trade. So here's what you bring to those sessions. Here's what you can bring to me any single day in Daily Profit or any of these sessions when I'm live on YouTube for my closing bell stuff. If you have a trade and you have an idea and you have a trade plan, we can build trades. So, I did this. I was trying to think. I built some, anatomy of a trade or trading strategy breakdown. I don't care what we have to do. If you have an idea, let's figure out how to make it a cost-effective, decent reward to risk setup. Know the probabilities, and if you like the trade, take it. If you don't like the trade, pass on it. Right. So that's what's kind of cool. Is like you're playing with the strategy. And you try to make it fit to what you want to see price do. You're trying. I'm typically always looking for like margin for error. Where could price go? What's the expected move? But yeah. So anyway, there's all sorts of fun things to do on option trading. All right. So we've got about 35 minutes to go. I'm just going to keep spot checking my SPX. I'd love a little squeeze towards 68.40 before the close. Daily profit play is still down. It was down $200. Now it's down $300. That's what happens when you're running out of time. It's very binary. I need price to get back above 68.40 to make money on the trade. If it doesn't, I lose 400. But that's why I have profit traps. So looking to see like this one is up about $100. This one potentially can pay $900, and I'm highlighting. And in a way, it's like I might need it. I might need that to be pretty spot on around 25 or so. Okay, so we'll see. At the end of the, if I lose on daily profit play today, if I lose that $400, I'm probably going to wash the day because I will maybe get a nice little profit trap at the close, and that's fine. But taking what was funny is I showed this morning in my daily profit plan. I have a lot of trades here: 1, 2, 3, 4, 5, 6, 7, 8. Okay, that's a lot of trades. I have one daily profit play and 8 traps, like butterfly spreads. So of my max risk, I think on all 8 of those trades, I'm probably risking less than $500. On one trade with daily profit play, I'm risking $400. So, I'm not saying that one is better than the other. It's like we trade this for a high degree of probability, and the markets today did something pretty silly. They are not even close to the expected move. And here we are watching price get a little bit flirty at the end of the day. I said I've got a profit trap around the 6,800 handle as well. So 6,800, 68, 20, 25. This is looking bad for daily profit play because that 68.40 is my line in the sand. So if we're hanging out here, that's fine. If we're coming down to retest, maybe 68.15, 68.10, 6,800, there's also a big fat profit trap there at the end of the day. 6,800 looks like this. So, I've still got some ways to kind of bail me out for the day, but we'll find out in about 30 minutes. Okay. You recommend buy rights to accumulate stocks. Well, a buy right is just buying shares and adding a covered call. That's all it is. A buy right is buying shares and adding a covered call. So all you're doing is buying shares and taking immediate income off the table, right? So what happens if I did a buy right? Again, let's walk through it. Give me a stock. Give me a stock. Silver, short term. I just wait for a pullback. Medium term, long term, bullish, bullish, bullish. I'm buying like loads of dips on silver, loads of dips on gold. Be patient. I think that this is setting everyone up for false expectations on gold and silver because it's been running so hot this year. This is like, oh, this is the market's way of talking about the debasement trade. Maybe it is, right? So having some exposure in it is totally great. But when an asset like silver is up over 100% for the year, what do you think it's going to do next year? If we're lucky, it's up another 30 to 50%, and it is like silver bubble, right? It's up 100% next year, silver bubble. Like it'll end badly, but I think having some exposure is great. You can go right now. You can buy shares of SLV, go out 12 months, sell an at the money covered call, your buy right that you're talking about, and you can get 22% on that. Watch. If I bought shares right now of silver at 55.84, so this is SLV at 55.84, and I go out to December of, I guess I go January 2027, so just over a year. And I buy it right now at 55.83, and I sell the 56. Okay, so if I collect $9 out of so that'd be $900 out of a 55.89 investment, I can go out and collect 16% on silver right now. Now, if silver goes up 30, 40, 50%, that's a stupid trade. But if silver goes down, I just lowered my cost basis down to $47, which is a pretty nice discount. Okay. So what I would consider is if I did this right away, one second. If I did this right away and I buy the shares right now, and this is just talking like right now, totally hypothetical. If I buy the shares right now and I added a 12-month or just about a 13-month covered call, I can get 16%. Okay. Now, what I would be doing with this is guaranteeing myself hopefully 16% return because I buy the shares, I lower my cost basis to 47, and my cover call gets called away if price is above 56. It gets called away, and I make 16%. Okay. In addition to that, if I see prices are falling, then I will add more shares. So because I don't like to buy at crazy highs when it's already up 100+%, this would be the one that I would buy and do a pretty hefty covered call to get a discount on. But if it goes lower, if silver drops lower, then I'm going to buy more shares. Okay. So we are a pretty decent stretch away from all of our moving averages. Don't be surprised if we pull back into, $49 on SLV. Don't be surprised if we find some of these moving averages with some type of topping pattern. So what goes up aggressively can also come down aggressively. And I'm just trying to be patient. I literally have pending orders like at every moving average, and I'll just scoop up a little $1,000 to $2,000 position. I'll build up my trade size. And then once I'm in for X amount of shares, if I want to sell calls against the whole position or the half position, I will. I just have to calculate my break evens. Okay. I mean, a collar trade is fine, but you're not going to lower your cost basis. All you're doing with a collar trade is you are, looking to protect the downside. But this is why I wouldn't say I don't want to take a full position at the top. I would say I take a position, and this is like position one. If I take position one and I've got add-on trade, add-on trade, add-on trade, let's say this is 100 shares, and then another 100 shares, and then another 100 shares, and then another 100 shares. Could I afford to do that? Sure. That's about $5,600. This is about another $5K. This is another $4,600 and another $4,000. So I'm all in for what? 10, 20, about $24,000. I mean, that would be a 10%. So if I did that, that'd be a 10% allocation to, a 250K portfolio. Is that what I want to do? I mean, maybe. Or do I want to just trim it? Trim it up. Okay. So there's all sorts of ways to do it. But I'm saying if you're looking at a fresh position now, I would definitely trade some type of option around it. A collar trade could be helpful if you buy an at the money put, because if price does fall 10, 15, 20%, you can grab some profit there. But I think if you just go out and do a covered call, you're going to get pretty similar discounts. The difference with a covered call is you're capping your upside at the current price. Right? Like if price goes back to $60+ for the next 12 months, like you're capped at the 56 sell call. So that's the most you're going to make. Okay. All right. Checking on a couple of things here. Double ups, not looking great. My ones are on 6,800. These are looking better. So this one's up 220. This is a 90 by. All right. I might just take profit on this one. What does this one pay? Let me double check this one for max profit. Max profit is 880. Okay. So I've got two here that could pay pretty well. This one pays $800. The one that I have highlighted, this could pay $880. This one could pay up to $900. That is my big fat profit trap right in here. So if we're coming into this 6,800 handle into the end of the day, this could be a nice chunk that pays me up to like $1,700 or so. That's enough to wash my daily profit play. That's enough to eat the other risk and probably walk away with close to $1,000 profit. But we got to keep falling. So let's see here. This one's up 20. This one's up to. I mean, if I get like $400 to $500 on this trade, I might just take the profit to be safe and then see where cash settles. This one has similar potential. This one's only risking like $85 to make $900. So let's see if this one gets a little bit more glorious here at the close. Nice. RSD says, close my daily profit play. Did you close for a winner? I'm hoping that when price came up around like 1 o'clock, you were able to close out for a little bit of a profit. So we had lows at 13 just now. We're back to 20, 25. So this one, I mean, my risk on this trade, the 20, I'm only risking like $120. So for me, it's almost worth just like holding out on the risk. And it's like, yes, I'm up, $150, $200. It's like, should I take it? Well, I mean, I can, but I have other risk to like offset today. So I really need to see if I can just land a profit trap at the end of the day. Oh, I gotcha. Okay, so $1.30 and 2 debit. That's totally fine. And honestly, you manage the trade like really, really well. So, why do I not touch the trade? Because I really thought after having 2 failed days of market maker moves and expected moves that today was going to end up being inside that plus or minus 31 points, which it's not. Okay. Let's see here. William says, let's see, call your broker, get the account updated. Okay. I have closed 100 shares of the SPY in my 401k. I'm not allowed to do options in my 401k. Well, right. So how do I sell calls in my joint account but not allow? Yeah. So not naked calls. I mean, if you own shares of something, you can sell calls against it. Who's your broker? That sounds like probably another Fidelity issue. I have a lot of traders that are like, I can't do this. I can't do this. And then I find out the broker's Fidelity. Probably one of the more highly restricted brokers. It's a company 401k plan. So I'm not sure who the custodian is. Look, if you don't like how your 401k is going, and here's what you do. Keep the company plan, keep getting that free money from your company, keep the match going, but you can take a portion of that and you can transfer it into a broker of your choice and do a self-directed IRA. That's what I do. So I have a 401k plan that I keep feeding in like every month. Okay. But then I keep it live, like the account's live, the custodian's live, but that's like Voya, right? So I can't trade through Voya, but I can take a portion of those funds and I can transfer it into my Tasty account or my Schwab accounts, and I can manage that as a self-directed IRA. Yep. And of course, what I say with Fidelity. Fidelity is I find out it's one of the most restricted brokers for most traders. So look, I just had a client. It's family friend stuff that I manage. I had a friend that he has his 401k with Fidelity, and he has taken like 80% of that fund, and he transferred it out of Fidelity into a self-directed IRA that is now a Schwab. So with Schwab, he can trade whatever options he wants. He has level 3 options with his Schwab account. So he can trade whatever he wants. So there's ways around it. It's an inconvenience to dig a little bit deeper and try to find a broker that you can work with or be happy with. But again, Fidelity doesn't hold all the chips. It's like, look, they're lucky to have you as a client. They really are. And it's silly to let a broker or a custodian say, you can't do that. Because the fact of the matter is, like, you can do whatever you want. It's your money. So if you want to leave, then leave. But what I'm saying is, as a 401k, like, don't give up the 401k. Like, if it's set up with your work, don't disrupt that. Keep the money going in. Keep the contributions and the allocations going. But you can take a portion of that and do like a one-time transfer and do a self-directed IRA with a broker of your choice. Usually Schwab will take that. Tasty takes it. You can go wherever you want. Yeah. And Schwab, exactly. You get the Thinkorswim platforms. You can trade Thinkorswim Web. You can trade Schwab Web. You can trade Thinkorswim Desktop as well. Okay. So, like I said, look at it. Closing playbook was mentioned that Fridays recently are wiping out 2 weeks again. I mean, that's a small sample size. I mean, we've had some ugly, sell-offs. I mean, what we've been noticing is volatility has been really, really short and choppy, and then one big sell-off day is taking out days and days of gains. That's what this week was, right? We started, like, look at last week. We started here. We still went Friday close, right? We finished green. Today it's like, okay, so we took away 2 weeks of gains, but it's like, did we really gain a lot? We started here, right? We started here and we were up about 1.4%. So today we wiped a lot of those away. So it's been like, yeah, we wiped away chop for the last couple of weeks in one day. Big deal. But you go back, where are we? Look at the context of where we are. We have all-time highs right here. This is where I'm looking at, like, the real all-time high to me is we got to get the SPX back above 69.20. And the NVIDIA sell-off candle low on the 20th is all the way down to 65.20. So, like, to me, this is a couple of key levels. This is the high that we need to take out. This is a really important support level. And if the bears take over for a moment, this is where they're going to go. So write these numbers down: 69.20, 67.70, and 65.50. Write those numbers down: 69.20, 67.70, and 65.50. Those to me are the key levels that matter into how the structure plays out into the end of the year. I still think the market, get it over with. We have a nasty sell-off day today, and the market picks itself up, dusts itself off, and then works its way back up into the holidays. We have one full week of trading into the holidays through Christmas and New Year's when markets are thin, volume's thin. If we drift higher, we can probably get back to highs again, right? I would be shocked if December is a red candle, honestly. I'd be surprised. So we'll see. Okay. All right. We got 20 minutes left. Let me check some live gamma. 20 is still a good one. So right now I'm looking pretty good for a potential like 25 pin and a 6,800 pin. So right now I've got a pretty good chance for like a $900 and $1,000 winner between 6,800 and 6,800, 6,820. So we might be okay. This one is my 6,800. This one's my 6,800. That pays potentially up to $1,700. And then I have the current one, which is the 25 by 30. This one pays up to $900 for right around like 25 by 30. So 68.25, 68.30 zone, that pays up to $900. So between these three, this one, this one, this one, that is potentially like $2,600, $2,700 of profit. All I need is one in anywhere between like $900 and $1,000. That's enough to make me profitable on the day, even with multiple losses. So let's see where it settles. The day isn't done. And it's going to be slippery here in the next 20 minutes. So hopefully we're not going to see like price scream up to, 40, 45, 50. But if it does, that also gives me a win on daily profit play. So at the end of the day, like I'm going to sit here and go at the close and tell you, this is what I made today. This is what I lost today. And the fact of the matter is I probably overtraded. Okay. I was improvising when everything was just getting crushed today. And I was like, well, we either bounce around this 100% ATR and we stabilize, or this thing is going to be like one of those wild off the norm type day where we are, 2 to 3 times the expected move. And that's what we had. This was an 86 open, 68, 86. We're down to 20. We had lows at 01. It's like we had almost a 3 standard deviation move today, which is not the norm, but it is what it is. Okay. Yep. Somebody emailed me that before. Why no defense trades? Well, we did put defense trades in, but if you were in my live session, look, we were live for like 3 hours today. So if you weren't there with me, why no defense trades? Because as this is all happening live, this is hard to call the bottom. When the VIX goes up 20% in a single day, it's hard to call the bottom. So it wasn't until the VIX turned that I would have been confident calling the bottom, which is what we did around that 6,800 handle. And what we also noticed today, that the VIX was screaming up here. We calculated out like a 1.11% move, and the market actually dropped 1.3. So the VIX didn't actually do its job today. The VIX should tell us, how far this market's capable of moving in a single day. And today it failed to do that. So that was a bit of a surprise. So I did put a defense trade in, but it was like a 67.70, 67.75 area. Like I was going below today's lows to make sure that if we were going to, test the lows, that I'm not just going to get burned and throw a trade in arbitrarily. I've said this for many, many weeks on these defense trades. If the VIX is screaming, you can't just assume that the bottom is in. You have to let the VIX find a top. Okay. So it can certainly do that. All right. Peter says, interesting observations when looking at your support resistance areas. Do you ever consider unusual, exceptional volume areas, volume profiles? Volume profiles, yes. Yeah, volume profiles, yes. Gamma though, gamma every day helps. Like I look at this stuff every single day. If you want to go bigger picture, you want to go out like, a month or 2 or 3, then use volume profile. Those are really sticky levels, right? But every single day, like gamma is really reliable. I don't remember what we looked at this morning with gamma. I just know we had big like gaps in between like positive, negative gamma. This is what I've been watching all day live. So once we started to drop here, we started lighting up. This thing just lit up at 6,800 all day, and we got there, and that actually was helpful calling the bottom today. Okay. So this is what I use dynamically like every single day. Yeah. Well, it wasn't posted in Telegram because we stayed live in the session for like 3 hours. So I took it live and it's pending. It didn't get filled. I was looking to see if price would break the lows, and it was way down here at 70. Didn't get filled. So, look, today was just like an abnormal day. Daily profit got filled, and we've had a crazy greater than expected move. And what I'm trying to do is mitigate some of the risk at the end of the day. All right. So all this is, let's see what happens. This one has a chance. So like I said, these 3 probably the closest opportunities for profit into the end of the day. Either we come up to like that 25, 30. Maybe I get really, really lucky here if we get a screamer up 19 points in the next 15 minutes. That'd be a really ridiculous move. But I've seen sillier things happen. So I think between this was up like $300. It's slipping away because we're nowhere close to that 6,800 handle anymore. But a lot can happen in 15 minutes. So we'll see. That one is max risk of 85. That's a max risk of 120. This one has up to $900 of profit traps of around the 25 to 27.50 zone. All right. This one's looking a little bit better. Okay. So yeah, again, a lot can happen. Pretty slippery price in 15 minutes. Let's see if we are going to go, right now, like staying around 24, 25 is great. That's like a $900 winner. getting up towards like 40 or better. 40 to 50 would be great because that gives me a daily profit play winner, washes a lot of my risk for the day, and I have a profit trap in the like the 40 to 55 handle. 50 is better than 40, but even if I washed away the risk from daily profit play, that'd still be a good day. So that's all coming in the final 13 minutes here. Okay, give me one moment. All right, at 27, if we can get a screamer up here towards 40 plus, daily profit play walks out unscathed. Even if I manage a fractional trade, like I mean, as long as I'm not taking on $400 heat today, like that's a big reduction in risk. So that makes the rest of the day actually quite easy. If I just, but again, if I eat daily profit play, then I'm trying to make up for it elsewhere. All right, so we'll keep an eye on this one. This is going to be on my other screen. What else do you want to talk about? Did I miss any other comments here? Let's see here. Yep, thanks, Mike. Okay, we're at 28. 12 lousy points to go if we can get up above 68.40. Might as well move the chart alarm down. 68.40. That'll be the saving trade on daily profit play. If somehow, like I said before, if somehow we stay above 68.54, 68.54 is the market maker low of the day. Based on the open right here, plus or minus 31, if we somehow close at like the 50 to 55 zone, that'd be market makers is doing amazing work at the very, very end, like literally the final minutes here. Is it a high probability push for 25 points? Probably not. But either way, what's my DPP at right now? It's down 360. Max risk is 4. It's like I can save $50, right? But what I'm hoping for is I want to land a profit trap at $900. Then I'll pretty much wash my day and maybe give me a couple $100 profit. So we're at 22 right now. Let's see. So that trade 68.50. Okay. So these three are still the most promising. So we're at 25. This one has the most potential profit here for $900. It's up 150. And it's like all the magic happens here in the next 10 minutes. If we're staying around 25, 26, 24, 25, 26 for the next 10 minutes, this thing jumps up to like $800 or $900 profit. Even if we're at 20, I can still grab about $500 out of this trade. You're looking for a taco tweet today? Yeah. I mean, I don't think that's going to happen, man. Look, I think this is just a nice little reset for the end of the year. Honestly, like I wouldn't be overly concerned about today. I really wouldn't. I'm telling you, like, as long as this market does not break below, look, this is what's scary about the structure we're staring at right now. This level right here, okay, that line that is the top of that October 10th candle and the top of that November 20th candle, that is really good intermediate structure. So if we find it and bounce off it, that is past resistance becoming support. It's that simple. Okay. If we break below that, then we talk about the lows of these candles. That's still support. But that gives the bears a lot of freedom to work this back down into some range lows. That's why I'm saying if we're going to hold, 67.70 is a pretty good spot to hold. We have had now 2 weeks of support at 6,800. That held today. So I think that just a little sell-off candle, don't get discouraged. There's still plenty of structure. We're going into another, we have one full week of trading with some news, good, bad, and different. Let's see what price does for the next week. If we can get through next week unscathed, meaning we don't take out these crazy, this is like kind of crazy pocket of volatility here, then we could rip up in the end of the year. Okay. If I'm not mistaken, I think next Friday is also a major, major, major VIX expiration, like triple, quadruple widgeon expiration type thing on the 19th. Which sucks because I just remembered like I'm going to be traveling on the 19th. So hopefully things are looking pretty good. I'll be traveling Friday morning, in fact. Okay. There's your Trump tweet, right? Silver's very good. I like silver. Nobody knows more silver than I do. Yep. There's your taco trade. No, in all seriousness, so it's like as long as price doesn't break below 60, 67, 70, I think this is still bullish. I think the market still finds a way to find some footing, grind into the end of the year, and we go from there. Okay. All right. We got 7 minutes left. Trying to make things a little bit more exciting. Can I get this trade that's highlighted to start screaming up here for profit? This trap is up to 26.27. Like 68.26, 68.27 is like my perfect little pin. 22 is still a profit trap, but it's on the lower side of it. So I'd like to see price get back to either 25.26 or dump back down to like 10 or 05 even for the end of the day. Let's see what this like magical final minutes are all about. Come on. NQ down 520 as of now, 2% drop. Yeah, I mean, literally, this was my thumbnail for today, right? Thumbnail for today was key market rotation. I mean, what we are noticing right now in the heat map is like everything tech is red today, right? I mean, most things tech, like semiconductors, the AI stuff. It's like today the AI, caught the sniffles. Everything semiconductors, everything, computer hardware, electronics, software, like everything's pretty red. And tech obviously was a leading sector. I am curious, like after it closes, like what's the year to date performance after a day like this when tech was down so big, right? So it doesn't mean like sell all your tech. No, it doesn't. It just means stop carrying like a mass. Like, look, the market is 40% concentrated in 10 stocks. So what is it trying to do? It's trying to cleanse that concentration into something a little bit more reasonable. That's all it's doing. So if it happens, like, yeah, I would happily rotate out of. I mean, if I had a stock that was up 100+% this year, I'd be happy to take profit and rotate out of it and reallocate it differently. Trim like if I had a 1% position in it and it's up 2.5, 3%, trim it. You know, it's okay. Like go back to what you wanted to allocate originally, because there's a lot of profit out there. A 180 change in sentiment? No. I just think its money has to find its way into other things. I mean, here's an example of where this is why I think the rotation is happening. Okay, RSP, and again, given a lot back today, but this is a big, big, big jump in RSP. But notice how this pattern is not that far off. What did I do? Connect to the lows, connect to the lows, connect to the lows, connect to the highs, connect the highs, connect the highs. Look, we can deal with a lot of chop here. This is a lot of indecision. And the tricky part is everyone gets so excited about all-time highs, and what if it comes back down to the lows again? It's just a chop fest. And the market gives us nothing but sideways, nothing but chop. And like, look, there's opportunities to buy dips, right? If it comes down here, buy the dip. It's probably going to work. But it's also just means like annoying sideways volatility where you can't really get a clear direction. So I just think like, surviving chop is going to be like a really important tell for 2026. If we don't get direction, if we don't get momentum, you got to find a way to survive that stuff. Right? All right. We have 4 minutes to go. I'm pretty good on this. Like this trade right here has a decent potential. It's like the final few minutes. The butterfly gets really, really aggressive here in the final few minutes. 25 to 27.50 is like my perfect little price. 27.50 is my perfect price. We're at 25 and change. Like this might get really good here in a couple minutes. 19th is witching over a trillion. I know. And it's look, every freaking month is going to be like the biggest options expiration. I know. It always is. Why? Because options are crazy popular. So it's just going to keep growing. I mean, if you're incentivizing every trader to trade options, there's going to be options expirations that are getting massive, more and more massive every single month. But it doesn't mean anything. Like it's just a big number, and what it means is like all of the premium, around it is most likely going to finish out of the money like it always does, and most of your like hedging that goes on through those OPEX cycles is going to expire, and then it's a clean slate. So the most vulnerable time is right after a major OPEX because not everyone is going in to get paid on those hedges. So they either lose on the hedges and like, well, crap, that didn't work. So they don't hedge right away, and then something happens in like that first couple weeks of the next major OPEX cycle. So it's like the after an OPEX, you get like the first week or two of the next cycle. That usually is where the market maybe has some vulnerability. So, and again, this time of the year, holiday wise, it's like just, I think it's going to be noise. I just think it's going to be noise. That's all. All right. Come on. So I'm keeping an eye on this one for right now because this is my best chance to get some profit. 27.50 would be ideal. We're at 25.50 right now. I mean, a 68.26, 68.27 right into the close could be pretty great. Okay, it's getting better. See if I can get this thing to scream up here towards like $600-700. 305. I mean, really, it all boils down to the settle. 68.26. Come on, baby. If I made it like 27 or 28, that should be, I can't ask for like a better trade than that. So that iron fly for 915. 915 max profit. Wait. Where is it? This one. This one. This one. So this is the one that's closest. 85 risk. Oh shit. It's 415. Never mind. My bad. I thought I had like a 9. Damn it. All right. Well, that just lowered my expectations. I can still max out at like $415, but shit. I thought it was going to be like an $800 to $900 winner. This is almost max profit here. All right. Well, that's essentially going to wash my daily profit play. I've got nothing else that's helping me today. Son of a biscuit, man. 437. I mean, this thing's like maxed out, dude. 427, 427, 402. Let's see if I can close this thing out. 510 debit settled. I mean, that was honestly like pretty perfect. I needed a 2750. I got 2738. I just maxed that thing out for like $410. So my net result for the day, I washed my daily profit play in full. So I lost 400 there, gained 410. I have some small losses on my flies. I probably end up losing about $200 today. Net, probably down $200, $300 on the day. Honestly, it's fine. It is what it is. At least I had one winner. Oh, fudge. All right. So kind of a max out there, which is fine. Small, 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 all small, like all small. Crap. I thought that was an $800 or $900 winner. I had 2 trades at the 915 credit. That's why I was following that one closely. But yeah, it makes sense because I split the strikes. But it's cool. I mean, $400 is good. I'll take it. It washes my daily profit play, and then the rest is manageable risk. They're all small risk. Darn it. I mean, ideally, what I really needed today, risk wise, I needed price above 68.40. That was where my biggest risk was at. Was below 68.40. That was daily profit play. So if we were above there, that would have saved $400 risk, and that would add a profit trap between 40 and 55, and that would have been nice. But even like de-risking $400 would have helped. It was either there for that potential like profit trap, or that 6,800 would have been nice to get. Like that would have been like a 1,700 profit trap. But it is what it is. We'll move on. All right. So we cash settled at 68.2742. Like I said, I needed like the perfect pin on that trade was 68.2750. So I basically lost out on 8 cents of my perfect trap. But that's one of many. So obviously one trap didn't do enough to cover all of them. But at least it was a valiant effort on the day. It could have been way worse, but managed to just be down a couple $100. Which I will say this for some wild and crazy, 3 standard deviation move days. I have done much better, but I've obviously done way worse. Nvidia was the day that I was down, almost 2 grand, and ended up fighting back to lose like I think $700. And then on the way back up, it's like I was up 2 grand like the week or so after. So it is what it is. We'll come back and we'll grind it next week. So all good. All right, let's talk a little top down, and then I got to go. So tail of the tape: S&P down over 1%, Nasdaq down almost 2%, 1.9, Dow down 0.5, Russell down 1.5. VIX, big day for the VIX, all over the place. Started out in the 14s, went all the way up to nearly 18. So we had a VIX move today of 20%. No big deal. Bond index. What happened to my charts? I'll go back to VIX here. Let's go to the move index. Any bond volatility? Not much. Dollar index drifting a little bit lower post FOMC. Currency strength on the day. Today is CAD, euro, dollar. Dollar was on top a little bit, gave some back. Dollar index is still, I'd say vulnerable. I think that right now it's like we turn pretty nicely off of the key moving average on the daily time frame. So a little bit weaker dollar would probably be the path of least resistance for now. I don't think we're going to have a ton of follow through on the dollar. I think if we come down to these lows again, watch and see, like, this could be a low risk, high reward trade. If the dollar stops here, goes back up, that's not a bad trade. Oil leaking a little bit lower. I've got a futures trade on to the 16th. So that'll be a full profit next week. For CL, I need to stay above $50, and it probably will. Natural gas, big reset. That one kind of pisses me off a little bit. I'm long in this till 2027, but I just can't see this thing like get a freaking break. I want it to go back above $20 if possible. Gold, pretty good day on gold, but you can see a bit of a fake out. Bulls had a nice little run, gave a lot of it back today. Silver finally showing signs of reality. It's like we're not just going to keep ripping like crazy. This is up like 20 or 30%. This last little run here since October, a 41% run in silver to add to a 100+% gain for the year. I just expect a lot of volatility. Everyone thinks like, I'm just going to go gold and silver and do 100% gold and silver portfolio. You will be shocked to see how volatile that portfolio is going to be. It might be great in the long term, but man, I would feel totally uncomfortable having that type of crazy volatility in my portfolio. So just be patient. Let the market do what the market does best. We'll find equilibriums. We'll find pullbacks. We'll find reversions. We'll find balance. We'll find stuff that we can trade. Don't chase. Bitcoin, even with a sell-off day today, Bitcoin's not down a lot. That's kind of nice to see. Maybe some of the damages in a Bitcoin we'll see. With the Fed, what they said this week is we are going to get some added liquidity to the system. Even if it's mild, it's better than none. So that's kind of like the liquidity crunch or like the liquidity concerns. Having the Fed kind of step back in and reiterate that they'll be adding $40 billion a month. That does, add fuel to the system. So I think that could be a good thing for Bitcoin. But we'll see if there's that correlation with NASDAQ and Bitcoin to see if we get a year-end rally. MicroStrategy down to 176. I'm already out of this trade. I do have to see if we'll stay above like 165 or so, 160, 165. Copper, look at this crap. Major tariff disruptions. I wanted to take a trade so badly in copper when this happened, but it was like the option bid ask was so bad. I didn't take the trade in copper futures, but I wanted to be long there. Oh well. Japanese yen. Let's go FXY. This is Japanese yen. EWJ is the Nikkei. Nikkei is up near all-time highs. Where's my DAX? DAX is sideways. We haven't made a new high in DAX since October, and that was the same high we made back in July. So sideways. But also this could be a nice little sideways range where if we go sideways, maybe an opportunity to average back in, accumulate some more. And this isn't like the best entry. It's like one entry there. If we take this low in this high and you buy, let's say, a 382 or a 50, area 2. I don't mind getting long the DAX. If you like international, if you like non-US, like Europe looks pretty good. Europe is pretty cheap. I mean, as long as Euro stocks perform at a decent rate, they will probably hang in there and do pretty well. I think that's the hard part with the US is like the US stocks and valuations are kind of priced to perfection, and this market could easily roll over on stocks just for a little bit of an earnings compression. This is the ETF that I sold for the whole year, like being long Euro stocks. This is the FTSE, so the UK peaked out around 99.50. Haven't seen highs since, but still, like posture-wise, looks pretty good to buy those dips. Argentina, big poke on that bailout, and then nothing from there. China still sideways. Maybe some more accumulation. Maybe here in the 200-day moving average. Brazil, chart alarm set at the highs. I'm up. I'm a pretty decent amount. Brazil and Latin America are up like 30-40% for the year. Mags, waiting to see if this is a correction pattern. If we go high, low, lower, high, lower, low, and we get into correction in mags, if this is the rotation, I'm just trying to look at it from a technical standpoint. So where is my drawing tool? Here. If we go high, low, lower, high, lower, low, lower, high, lower, low, I would just wait. See if we bottom out in here, get above the trend line. You get the lion's share. You don't have to call a bottom. And look, if we rotate like that, if Mag 7 drops like that, we are going to see a correction in the market. There is no getting around, 10, 15 trillion dollars of market cap and so few stocks. If there's a heavy rotation out of them, it will plague the market. Okay. Apple, Amazon. I've got a couple new trades on an Amazon. Broadcom, I put a new trade in today for Project Options Edge. Google, I put a trade in on Project Options Edge. Meta, oh baby, look at that rejection. 710 down to 640. Is that real? That's got to be no. That's not okay. That's fake. That looks like a data error. Okay, so we did not have a rip today at 710. It just opened up and kind of fell through. All right, I don't think that's accurate. Defense, we can check the sectors today. Microsoft, if I zoom out. I said this earlier this morning. We had a long, lengthy live session on Daily Profit Play. Here's what I think. You go into any stock from April's lows to whatever highs they created for the year, especially if they're at all-time highs. Take a Fibonacci swing from low to high and just wait for some of these key levels to appear. Microsoft is at a 382. There's a pretty good chance we hit the 382 and go back up to the top. So if you want to position for that, you can do lots of option trades in here, see if Microsoft goes back up the top. In fact, on Monday, I'm going to write this down for Microsoft. This might be a decent trade into the end of the year. So we're trading at 478. I do have a trade running, I think, on Microsoft. Let me check here. So I have a $5 wide profit trap. This one's out to the end of the year. Yeah, I got filled for $1. It's a broken wing butterfly. This is exactly the trade I wanted to kind of build. So, I have a profit trap of $1,000 on top of the credit that I pulled in. So we'll see. But as long as we stay above like 475, I'm not going to risk anything. So back up to 480, 490, that could be pretty good into the holidays. We'll see. If we dip back below, maybe I set up another similar trade where it's like get some credit, get a profit trap, and then take on a little bit of risk, but price it have to break to fresh lows. If that doesn't happen, then get a profit trap in here and make it worth your while. But I'd want to see what that risk looks like first, so we can talk about that more on Monday. So if you'll remind me, if anybody's jumping into my daily profit play session on Monday, remind me of Microsoft. See, Chris, let's talk about a broken wing butterfly in Microsoft, and I'll be like, oh yeah, let's talk about it. That's a good looking trade. Netflix, Project Options Edge got a ratio spread. NVIDIA, we were way down here on NVIDIA for some ratio spreads. Tesla, I'm doing some creative stuff. Tesla's up on the day. Good for Tesla. It's not bad. Let's see. Bonds down. 10-year up. Mortgages up. I mean, this is a pretty. I swear this is a good sign. Even though the market's down today, we actually have market breadth on S5FI, which is the stocks above the 50-day moving average. We're back up to 60% of stocks. Like this is encouraging to see that money is rotating elsewhere. It really is. So I mean, this is why I'm saying like even today's move is mostly tech led. Like this is semiconductors. This is a bit of like the AI overhype stuff. This is profit taking. That's kind of what it feels like. I wouldn't put today in as like, oh man, this is a crazy, terrible day. It's really not. Market breadth is still showing signs of life. You know, we've got 62% of stocks above the 200-day. We have 60% of stocks above the 50-day. That's pretty encouraging that the broader market is still maintaining a bull market. 58% of Nasdaq stocks still above the 50-day, and 57% above the 200-day. Still a bull market. So until we're like below the 50s on both of those, broader market's still like clinging to some gains, trying to. Okay. Costco, big slip on Costco. I'm still, I've got some full profits on Project Options Edge in the 600s. We haven't had to touch those trades. Those will expire next week. What else? I do have some maintenance stuff to do next week. I know I need to do this before I head out of town. Let's see. Next week, trading. If I go DTE, so I've got a full profit running on oil. That's up $2,600. I've got some hedges on the Russell. I don't have to worry about those. That I eat those losses, but I'm up like, let me see my IWM trades. So my Russell hedge is down $5,000, but my IWM, which was my ownership, is up $67,000. So I'm sacrificing $5K to make $67,000. That's not bad. That was a hedge that would have paid like 3 to 1, 4 to 1, 5 to 1 to help offset some of that. So anyway, for next week, oil should be full profit. Russell will be a wash. I'll eat that hedge. Let's see your FCN. We're down on pinch point. That expires next week. IBIT, got some shares. What's my expiration here? December. Oh, protected puts. Okay, I've got some time on those. And then I've got some covered calls. Tesla, got some covered calls. This is a pinch point trade. Ford. I could roll Ford actually. I've got a couple of shares. I could roll that for maybe a small bump of maybe another $100 or so to increase my cost base or increase my profit. What else? Qs. Yep. So all these are covered calls. Roll my covered calls. Diagonal spread. Keep an eye on that one. That's the diagonal spread that I'm going to roll. It's actually showing some decent profit now. That's good. Google coming in for some full profit on. Oh, those are protected puts. Russell, Chipotle back up to 36. Nice. Sell some more calls on Chipotle. JD, some calls. Yeah. So I just have some rolls for next week. I'll take care of those before I head out of town on Friday. All right. I'll let you go for today. Thanks for joining in. Thanks for being part of the closing bell magic that I guess you could see what the magician did, and you saw the rabbit hopping around in the background instead of it actually being magical. I made money, but I end up losing on the day. Small, couple $100, but could have been way worse. I probably had about $1,000+ of risk on the day, ended up losing like 200, but it's okay. Profit trap was fine. That's on me. I'll do better next time.